We are on the edge of a massive financial storm, a moment where the very idea of what money is being seriously challenged. And this is causing a huge flight back to what's called hard money. Assets that can't just be printed out of thin air. In one corner, you've got gold, the undisputed champion of value for the last 5,000 years. And in the other corner, you have Bitcoin, the digital upstart built on pure math and code. This isn't just some boring economic debate. This is a real showdown for what we trust when everything else feels shaky. So let's dive right in.
So why is this all coming to a head right now? It's because of this number. $1.8 trillion. That is the absolutely mind-boggling amount of commercial real estate debt that's coming due between 2025 and 2026. Think about it. These loans were signed when interest rates were basically zero. Now they all have to be refinanced in a world where money is way, way more expensive. This could create a wall of maturity that triggers a massive wave of defaults and bankruptcies. This is the ticking clock that's forcing everyone to ask the hard question: where do you park your money when the system itself is showing cracks? And look, this isn't some fringe conspiracy theory we're talking about. The biggest names in finance are all waving red flags. We're talking about the founder of the world's largest hedge fund, the CEO of the biggest bank in America. The consensus among them is clear. The crazy amount of US debt is a huge problem. They're all pointing to the risks, and trust me, when these guys talk, the markets listen. Their worries add some serious weight to the idea that we could be heading for a major economic shakeup.
Okay, so here's our game plan. First, we're going to unpack this perfect storm of debt that's brewing for 2026. Then, we'll look at the case for gold, the classic safe haven. After that, we'll size up Bitcoin, the new kid on the block. Then, we'll put them head-to-head in a proper hard money showdown. And to wrap it all up, we'll look at the new rules of the road for navigating this new reality.
All right, let's get right into the thick of it. What exactly is fueling this 2026 debt storm? Well, it's not just one thing. It's really a collision of historical trends, some wild monetary policy, and frankly, a growing loss of faith in the money we use every day.
Now, what's so fascinating here is that printing money is nothing new. Governments have always fired up the printing presses in a crisis. But look closely at that timeline. You see that turning point? 1971. That's when President Nixon officially cut the US dollar's tie to gold. Before then, every dollar was a claim on a physical piece of gold. After 1971, it became just a promise, a currency based on faith. And you can see what happened next. The scale of printing just exploded, especially in 2008 and 2020. You could say we're living in the endgame of that 1971 decision.
This brings us to a really important idea: currency debasement. It sounds complex, but it's simple. The ancient Romans did it by literally shaving off bits of their silver and gold coins and mixing in cheaper metals. Eventually, people figured out their coins were worth less, and they totally lost faith in the money. Some historians argue this helped bring down the entire empire. Today, we don't clip coins. The modern version is just printing more and more currency, which silently steals value from every single dollar you've saved. It's the same idea, just with a different technology.
Okay, now here's a crucial difference between your finances and the government's. If you get into too much debt, you go bankrupt. But the US government has a superpower. It owns the money printer. It can literally create new dollars to pay off its old debts. So technically, it can't default in its own currency. But, and this is a huge but, that solution is also the biggest risk. Just as Warren Buffett says, in the long run, it causes inflation. And if you overuse it, people can lose all confidence in the currency itself.
So, with this potential crisis on the horizon, where do people turn? For thousands of years, the answer has been pretty simple: gold. Let's take a look at why this ancient metal is making such a huge comeback. It's not just one thing driving this new gold rush. It's more like a perfect storm of factors. You've got this general anxiety about the economy, fears of a recession, maybe even an AI-driven market bubble. You've got political chaos, which raises questions about the dollar's stability. The sheer size of government debt is frankly terrifying. And maybe the biggest signal of all, the world's central banks are buying gold like there's no tomorrow at a pace we haven't seen in over 70 years.
Just let that number sink in for a second. 36,000 metric tons. That's how much gold the world's central banks are holding. We're not talking about everyday investors getting caught up in hype here. These are the most powerful financial institutions on the planet making a very clear, very strategic move away from paper currencies and towards physical metal. So here's the real secret to gold's power. Its value isn't just because it's rare. I mean, platinum is 30 times rarer than gold, and it sells for a fraction of the price.
Gold's real power comes from what the experts call historical inertia. It's been seen as money for over 5,000 years. That is a powerful, shared belief across the entire globe that this shiny metal holds value. It's a form of trust that has outlasted empires, wars, and every economic collapse you can think of. But now, for the first time in human history, gold has a serious challenger. An asset that was literally born from the ashes of the 2008 financial crisis, built not on ancient history, but on the cold, hard logic of mathematics. Let's make the case for Bitcoin. This right here is Bitcoin's core promise, its entire reason for being. While central banks can print an infinite number of dollars, and miners can always theoretically dig more gold out of the ground, the supply of Bitcoin is absolutely, mathematically, unchangeably finite. It is hard-coded at 21 million. No person, no company, no government can ever change that. It's the first time we've ever had verifiable digital scarcity. And you can immediately see why this idea is so powerful for so many people. I mean, imagine you live in a country like Venezuela or Argentina, where your government has literally printed your life savings into worthlessness. The idea of a global, unchangeable, decentralized asset isn't just interesting, it's a lifeline. It's seen as an escape hatch from the unpredictable and sometimes chaotic policies of central banks. For some, it's not just an investment, it's an insurance policy. All right, the stage is set. We've met our contenders. In one corner, gold, the ancient king, representing thousands of years of trust. In the other, Bitcoin, the digital upstart, representing the power of mathematical proof. So let's put them in the ring and see how they really compare. This is it. This is the multi-trillion-dollar question, isn't it? When the storm finally hits, where do you want to be? Do you trust the asset that has survived for 5 millennia, or the one that was designed specifically for our digital world? Let's stop guessing and look at the actual data. This chart really lays it all out. When it comes to pure scarcity, you gotta give the edge to Bitcoin with its fixed mathematical limit. But when you look at volatility, well, it's not even a contest. Gold is far more stable. Bitcoin can have these gut-wrenching 50 to 80% swings in a single year. Now, crisis performance is interesting. Gold's record is mixed. It did great in 2008, but has stumbled in more recent short-term crashes. Bitcoin, on the other hand, has so far acted more like a risky tech stock. And that's backed up by that last number. Its correlation to the stock market is a whopping 0.91. That means when stocks go down, Bitcoin tends to go down right with them, which really complicates the whole safe haven argument. So really, when you strip everything else away, it boils down to this fundamental choice. Are you placing your bet on 5,000 years of human history and something you can physically hold? Or are you betting on verifiable math and the power of a decentralized computer network? It's really a battle between history and technology. Now this slide is a really big deal. Forget what people are saying and just look at what the world's most powerful financial institutions are doing. For the first time since 1996, central banks around the world now hold more value in gold than they do in U.S. government debt. That is a massive shift. They are actively choosing to hold a lump of metal over the promises of the world's reserve currency. That's how much they want to hedge their bets. This trend might be the single most powerful argument for gold right now. So, whether you're team gold or team Bitcoin, one thing is crystal clear. The world is changing. The old financial rulebook is being thrown out, and we're all trying to figure out what comes next. Let's look at the concepts and regulations that are going to define this new era. To really understand what's happening, you need to know about this old economic principle called Gresham's law. It's actually super simple. Bad money drives out good. It just means that when people have two types of money, they will always spend the one they think is losing value, the bad money, and they'll save or hoard the one they trust, the good money. So if you believe the dollar is being devalued by inflation, you'll rush to spend your dollars and hold on to things like gold or Bitcoin. This is literally Gresham's law playing out on a global scale. And don't think for a second that this is still the Wild West of finance. It's not. By 2026, the game has totally changed. New laws are creating a regulated system for stablecoins, basically the internet's version of the dollar. Other laws are finally clearing up who gets to regulate assets like Bitcoin. And at the same time, the IRS is rolling out some serious AI to make sure everyone's paying their taxes. The message is clear. Digital assets are growing up and becoming a permanent part of the financial system. This quote from Robert Kiyosaki really just cuts through all the noise, doesn't it? For centuries, our entire financial system has run on a shared belief, an illusion, as he calls it, that these pieces of paper or digits on a screen
have value. Right now, that illusion is being tested like never before. And in their own ways, both gold and Bitcoin are a search for something more real, something that can't just be conjured up out of thin air.
And that leaves us right here with this one final question. This whole showdown between gold and Bitcoin, it's about more than just your investment portfolio. It forces every single one of us to ask a really fundamental question. In a world of printed promises and digital code, what does value truly mean? Is it something tangible, backed by thousands of years of history? Or is it something digital, backed by the unbreakable certainty of math? The answer to that question is going to define the future of money for all of us.